Brought to you by CNBC Africa and Safaricom Business. Great partners inspire great visions.
Hello and welcome to this CNBC Africa special debate ahead of the World Economic Forum on Africa holding in Abuja, Nigeria for the first time. Now, this debate is a collaboration between CNBC Africa and the World Economic Forum. We're hosting a series of 3 regional debates in the lead up to the World Economic Forum on Africa. Now, this is a second debate in the series. The first was held in Nairobi, Kenya a week ago. Now, the theme for this panel discussion is sustainable growth, a future beyond oil and gas. But before we start, allow me to introduce to you my esteemed panelists. To my immediate right, I have Mrs. Obi Ezekwesili. She's a woman who needs very little introduction. She is a former World Bank Vice President for Africa and former Minister of Education in Nigeria. She retired from the World Bank in May 2012 and returned to the country, where she joined the Open Society Foundation as a senior economic advisor, spearheading the foundation's new Africa Economic Policy Development Initiative. Next to her is Mr. Bismarck Rewane. He's the CEO, the Chief Executive Officer of Financial Derivatives Company. He's an economist and former banker. We're also, of course, another woman to look out for. Many of you are also familiar with her. She is Akudo Anyanwu Ikemba. She is the Chief Executive Officer and founder of Friends Africa, a pan-African organization that fights AIDS, tuberculosis, and malaria. Last but not the least, I have Tolu Ogunlesi. He's a creative writer and social commentator. He holds a master's degree in creative writing from the University of East Anglia in the United Kingdom. His journalism has appeared in the Africa Report, the Huffington Post, the Economist Online, and CNN.com, amongst others. Gentlemen and ladies who are being here, it's a pleasure to have you on our panel for today. Now, of course, our focus for this panel discussion today is to debate on whether West Africa can sustain itself beyond oil and gas and what can be done to move the economy of this region beyond a resource-based future. Now, let's start. I think a good place to start will be to first look at the state of the economy in that region, West Africa. We'll also take it from a Nigerian perspective. Now, we're seeing stable economies, we're seeing increased investment in infrastructure. How is that translating into better indicators for the region? For instance, income equality, education, health, stronger institutions. Mrs. Ezekwesili, let's start with you, perhaps from a policy perspective.
Well, thank you very much, Esther. I do think that the economic scenario in West Africa, perhaps approximated with that of Nigeria, is to say that it's become conversant with growth. And so the growth story is a common story. Everybody knows that. I think what everybody worries about is the disconnect between the growth story and the development impact, especially because it is through development impact of the growth story that you would achieve the reduction in poverty and the reduction in inequality. These are clearly more difficult to tackle. And I think the idea of the conversation around West Africa beyond natural resources endowment is really spot on, because that really is the most important policy dilemma of any policymaker across West Africa. How do you translate what we call growth today to broad-based growth, to more inclusive growth, to growth that is shared? And that takes you to the realm of policy of the kind that focuses on productivity. You really are saying, how do we move economies that are not as productive as they should be to reallocation of resources into sectors that hold greater promise for including much more people in the benefits of growth?
Bismarck, let's hear your thoughts.
I look at the West African economy in a different perspective. One is that here is what we call a natural wealth economy, which is oil dependent. Natural wealth economy is probably more extractive and less productive as against a produced wealth economy where people actually produce wealth. But first and foremost, you must divide the West African economy into two different zones, one the French-speaking and the English-speaking. But certain commonalities exist in the sense that now you have oil in Nigeria, Ghana, findings in Ivory Coast, and all across the Gulf of Guinea, as it were. Now, this means that to a large extent, if you take Nigeria as an approximate, Nigeria's labor productivity growth is 4%, and its real GDP growth is 7%, which means that there's a suboptimality of economic activity. You take the difference between Nigeria's real GDP of 7% and its potential GDP of 11%, there's that gap that needs to be. And the sustainability of economic performance beyond the dependence on that commodity, main commodity, is an issue. And that is what this debate is about. If you back out oil from the equation in Nigeria, which is already about 65% or 70% of the entire West African economy, what will it mean? If you look at that economic picture today, and you take out oil, 90% of export revenues, 75% of fiscal revenues. So to a large extent, those economies become very fragile or more or less failed states.
Okay, thank you, Bismarck. Akudo, we're still on economic indicators in the West African region. We're also looking at a Nigerian perspective. Are we on health? I mean, health definitely is also a priority for government. Are we employing innovative solutions to improve the health of West Africans?
So Esther, I mean, I agree with the last two speakers. The only thing is we've got to be alive for all of that to happen. And currently in West Africa, our life expectancy is between 40 and 50. And this is unbelievably low. So we're suffering from dying people in all of our nations. And there's a very clear link between health and economic development. You know, lots of professors have gotten together and done a number of studies 10 years ago that linked macroeconomics and health, which then established what we see today as the goals for Millennium Development, the MDGs. And you know, if you look at the MDGs, which are 8 development goals, 3 out of 8 of them are focused on health. And in fact, when you look at the lack of development in Africa, 50% of this lack of development can be traced back to poor health and a dying population. When a population is not healthy, you don't have a productive workforce. You don't have students who are learning properly and an educated workforce. So it's very much linked to health. And coming from my perspective, I believe that first we've got to be alive to address all these issues. Are we addressing it innovatively? I think we're starting to have the critical conversations around that, and I think WEF is really helping with that, and I'm glad that CNBC is convening around this. But I do think that we need to do a lot more, and that our governments actually need to lead this innovation. Be happy to speak a bit more about it when we focus a bit more about health on the panel. But I think there are lots of areas. We need to be innovative in terms of training, because we don't have the skilled workforce in health to deliver good health. So we need to be very innovative to reach more people and train effectively. We need to be innovative in terms of the technologies that are being used. We need to be innovative in the approaches for behavioral modification. You know, the billboards and the flyers have been nice, but we need to be a lot more innovative in the way we change behavior, and of course in the way that we finance health in Africa. So I'll stop there, but first I want to say that I think we need to be alive for all other conversations to start.
Certainly do need to be alive. We've got financing. That's a very good point that you brought up. Tolu, let's get your own perspective.
I would like to pick up from what Mr. Ruwani talked about, talking about the sort of the French-speaking and English-speaking classification. I think that one fundamental question is there such a thing as a West African economy? Do we get a sense? So on the one hand, we have an ECOWAS passport, which means that people can move sort of unhindered. But on the other hand, we have, the currency divisions, which means that there's still, as yet no common. I know there have been conversations about that. So that question is fundamental. To what extent do West Africans perhaps see themselves as a single or a common economy? There's been talk of a highway, the Lagos-Abidjan highway. It hasn't seen the light of day yet. If that happened to come in place today, what kind of changes are we going to see, in terms of doing business? We know, of course, at the moment that a lot of business is done, but I'm not sure there are any figures. I know that, for example, in Abidjan, there's a huge population of Nigerians, who do business, who've been selling. I know also that about 30 years ago, Nigeria expelled about 1 million West Africans, many of whom were Ghanaians. So we need to start looking at these things, to what extent are people moving? Why are they moving? Do people, are we looking at business opportunities, for example, within the West Africa sub-region? Until we answer those questions, I think it will be hard to get a sense of economic development. But I also think that it's one thing, of course, that is changing, is technology, the impact of technology. So, for example, I met a young Ghanaian, a few days ago, who's working in telecoms and in broadband and in IT. And listening to him speak, he might as well have been a young Nigerian in Lagos, facing the same challenges. So whatever else may be happening in, fields like oil and gas and whatever, I know that technology and the internet, for example, are going to be a key factor sort of in uniting a region that has not had a lot, in common before now.
All right, thank you totally for that. Let's move on. Now we'll talk briefly about the oil industry, because that's the focal point here, how we can move West African region, particularly Nigeria, can move beyond that in the future. Now we're seeing this region changing fast these days, of course, with the discovery of oil and gas, particularly in low-income countries, Liberia, Sierra Leone, Niger. We're seeing all of that happening. Now, how can these countries protect their existing non-oil industries or agro-based industries and sectors, and of course, their institutions? Mrs. Ezekwesili, let's start with you.
I don't know about the use of the word protect. I know of the necessity to run economic policies in ways that would enable the diversification process. What Natural Resources Endowment does for you is that it gives you a larger stream of resources, which, if properly managed, can become a springboard for your setting in place the systems that you need in order to shift your economy from sole reliance on the dominant sector of natural resources. I think that the scorecard concerning natural resources dominant economy in Africa is terrible. It's actually a tragic scorecard, other than a country like Botswana, which managed to move from a really poor, very impoverished African country, hugely dependent. I think more than 90% of their needs were met through development assistance in the 60s. But through good management of natural resources, precisely diamond, they were able to shift themselves from such a really poor country to a upper middle income country. And they still have serious challenges of building economically cohesive society where there is less inequality than they currently have. Their Gini coefficient is pretty still high at about 4.45, so that's significant. However, the main issue for natural resources economies is the problem of economic governance of the resources. Economic governance of the resources leads to terrible economic choices, which end up making all other sectors unattractive, and the political incentive of leaders to make those choices are particularly...
Okay, so if I could just comment here, this small low-income countries where this oil and gas has been discovered, do they have good examples that they can look to and say, okay, this country, that country A, country B, they found oil and look at where they are today. Can we follow that example?
That's why I'm talking about, Botswana, because Botswana, what Botswana did with diamonds is essentially, first they got their political incentives right. There was an important conversation about how politically this discovery of diamond is not going to lead us to behaving recklessly. So in terms of the political institutions, it's the country actually that has managed to have some level of significant political stability all through its independence. And so the political systems, the political arrangement enabled the leadership to be a leadership that focused very much on good governance. So Botswana's record on good governance has been quite impressive compared to a whole lot of the other countries on the continent where natural resources wealth has delivered really terrible outcomes. So political institutions are so important. Accountability of governance, very important. So they built those political institutions. The next thing they did was that they ran very stable macroeconomic policies. And so they tried as much as possible to get the best in terms of expertise. They trained their civil service and they trained their political class also to understand the issues in macroeconomic stability and how necessary it is to have that kind of macro stability in order to not create the usual Dutch disease syndrome that makes all other sectors not competitive and not attractive for investments to go in. Then they focused a lot on microeconomic type reforms, structural reforms. I mean, they have significant health issues, especially with regards to HIV and AIDS. But the most significant thing that they did was an emphasis on education. Today, the kind of challenge that they have with their education is what every other country is having now around the world, the matter of the relevance and the quality of education. But in terms of, if you looked at the Human Development Indicator for Botswana, it's way ahead most of the other African countries, including the relatively richer ones than it.
Exactly. Hold that thought for us. So with definitely good points that you brought up. Now, Bismarck, for these small countries that are discovering oil, before now they've been relying on other industries, especially agro-industries. What is your biggest concern as, going forward as they begin to receive this new oil wealth?
My biggest concern is that the debate about diversification assumes that that sector which is dominant is efficiently managed before you go and diversify. First and foremost, what have you done? Let's take Nigeria, for example, or Angola. How efficient is this dominant sector? How efficient is this golden goose, right? And if it's not efficient, then even if you are going to diversify, you are taking away inefficiency in your dominant sector and taking it all the way the other way around. So it comes back to structures. What economic structures do you have? Do you have efficient economic structures that are not as imperfect as the prior one? The most imperfect structures are the state monopolies. The best and efficient ones are the abstract perfect markets. So, and because markets are imperfect, they create rent-seeking and patronage-paying political systems, which talks about governance and all that. It is not that these countries are more corrupt than the others. The fact that the structure that exists that nurtures and fosters corruption are there. So you have to address the structural issues, and that leads to an efficient outcome. So there are fundamental structural issues. One, how is this oil sector being managed? Are you extracting the best from it? Is it well structured? Is it efficiently priced? And all of that. Then all other sectors of the economy, are they in near general dynamic equilibrium, which means that the incentive to create rent and have patronage politics out of it is reduced, because once there's no rent, then there's no incentive to do that. It doesn't eliminate it, but it creates this system. Basically, there's what you call the structural functional approach of sociological or anthropological living, which makes you, once the structure is weak, the function will be weaker, and that's what I'm saying about.
What was your thoughts for Tolu? Let me come to you now. You're a social commentator, and you've written on this kind of issues, particularly oil and gas now. We've heard of all these examples, but what is our reality?
First and foremost is to acknowledge, I think, that a lot has changed in the last 2 decades. I think we've made tremendous progress in West Africa, if one compared to. So I'm thinking of there was an article by Robert Kaplan in the Atlantic Monthly in 1994, the Coming Anarchy, which focused on West Africa, Sierra Leone, Liberia. It was wars, it was dictatorships, it was a very dystopian vision of West Africa. And looking at it, it was this lawless zone where people were dying and all that. 20 years later, a lot has changed. You now find that some of the fastest growing countries in Africa, are actually to be found in West Africa. Quite a good number, actually, of the fastest growing in the world, and also in Africa, to be found in West Africa. You also find that a lot of indices have changed. Wars have come to an end in Sierra Leone and Liberia. And governments have, democracy now seems to be sort of the standard, the default governance mode. And people are starting to have conversations about building institutions. Technology, of course, I keep going back to that, is also playing a part. So I think, first and foremost, we must acknowledge that we've come, quite some way from the days when the economists could look at the continent and call it the hopeless continent. So the question now is, how do we go from where we are now, where there's a lot of optimism, how do we convert that optimism, into actual change in the lives of the people I call the bottom millions?
Akudo, Tolu mentioned a good point there, building institutions. Now, many of this, still on these West African countries, the small ones, finding oil wealth. Now, I imagine many of them will be excited about that, but for many of them, they are low income, they have very poor health statistics. How would you like to see this newfound oil wealth being deployed to perhaps the health sector and perhaps in the area of fighting diseases?
So while there's been a lot of improvements, and I agree with you, Tolu, and generally building on the three speakers before me, we're talking about a growth story. We're talking about lots of improvement. We've come a long way, and now all eyes are on Africa. The corporates are, the business class seats are full on the way into Nigeria on a weekly basis. Flights to Africa are being boarded by lots of corporates from all over the world. So there is money to be made here. What I would say is that we should not limit ourselves to economic and financial tourism, but we should get them to look into other aspects of our development. And I think government needs to tax these corporates to invest in health, to partner directly with government, and to partner directly with civil society to create institutions that are focused on our social goods. So whether it's health and education, we actually need to put this tax on the corporates coming in to focus on that. And this, again, needs to be led by government. I mean, government needs to stand up for its people. And make sure that we're not being used in order to extract funds from our nations and take them off to other countries. I think we need to hold the corporates accountable as they come in to make tons of money. The issues about health in Africa are still very serious. Diseases like malaria are still claiming 600,000 lives a year, and 80% of this is happening in Africa. There are still 9 million people per annum being infected with HIV, and about 70-80% of that is happening in Africa. So our mortality and our morbidity, which is mainly due to, under 5 mortality, mainly due to vaccine-preventable diseases, due to diarrhea, and then most of it, again, due to AIDS, TB, and malaria for the older population. And then, of course, the wars and the accidents, road traffic accidents. These are the things that are killing Africans. First of all, I think we need to, stare these things in the face and acknowledge that we have these things that are killing us and that we need to do something about it and that it's urgent. That we're not going to take a back seat and have and say, well, you know, economic development will come, and then people will have enough money in their pockets and increased willingness to pay for good health care, whether in Nigeria or flying somewhere else. But then we're going to make this a front burner issue. That's going to take a very frank conversation. In Africa today, you have a 10% chance of living to 80. In the US, you have a 60% chance of living to 80. We need to have, you know, come to, you know, face this, because what this does is, you know, as we face other aspects and GDP grows and people become more wealthy, what they'll do is just head back out to other places where their money can buy them better health, better education, and a better life, and we still will have a poor Africa.
Well, thank you so much, Akudo. Hold your thoughts for us. A very interesting point you highlighted there. We'll talk more about them after the break. After the break, we'll take the conversation beyond oil. Welcome back. We're continuing with our theme for this panel discussion, which is sustainable growth, a future beyond oil and gas, looking at the West African region. Well, we have a new panelist joining us. His name is Jallow Waziri. Haruna Jallow Waziri. He's the Executive Director, Business Development Division at the Nigerian Stock Exchange. Until his appointment, he was the Managing Director and Chief Executive Officer of UBA Asset Management Limited, which he held from 2009. Well, he's been involved in major groundbreaking deals, such as the Heineken Eurobond and British American Tobacco merger and acquisition. Thank you so much, Haruna Jallow Waziri, for joining us. Now, you've been sitting in the audience. Just let's start with you. Share your thoughts on what you've heard so far.
It's important that people begin to debate these issues. There is more to oil and gas, like the theme says, in West Africa than we actually think. If you look at it from the perspective of what I heard when I was sitting at the background, it appears to me that there is the willingness to actually see that these things happen, and we seem to understand what those things are. But do we have the political will within West Africa to begin to change things like break down barriers towards Africa trade or West Africa trade? Today, it's a little bit more convenient than it used to be a couple of years ago. If you were going to go to Abidjan, you probably had to go on Air France, go to Paris, then come to Abidjan, when you could actually drive through or fly 45 minutes to get there. But what I hear constantly is that there's the willingness, but do we have the political will to bring those barriers, to be able to have an Africa-Africa trade within West Africa so that we can improve the non-oil sector in terms of how to see we can grow it?
Mrs. Ezekwesili, but perhaps let's try to answer that question here. I mean, we talk about it all the time. Do we have the political will? Do we have the political? When are we going to have this political will?
I think on the regional integration agenda, there is too much of rhetorics, less of technical leadership, and a continuing sense of nationalistic imperative, which is mostly driven, of course, by the politics of each of these countries. But what's interesting, when you look at the entire Africa, at 12% interregional trade, it is doing so badly compared to other regions of the world. Even the least of the regions is, of course, say Latin America. And, you know, at about 30%, it's definitely way ahead of 12%. And when you look at Asia, where most of our African countries like to look at as good examples, theirs is way beyond 45%. So if we can even boost trade, internal domestic trade, for a population, if you looked at all of Africa, not sub-Saharan Africa, but all of Africa, and you looked at a population of 1 billion, that's a significant market for you to dwell on. Now, what is the missed opportunity? The missed opportunity is that whereas countries are busy being less driven to getting this convergence of policies, of institutions, of incentives to drive economic activities on a regional scale, their citizens are actually integrating. There's, you know, when you look at the economies, the informality of the African economy, particularly the West African economy, the informality of the economy means that is a reasonable percentage, beyond 60%, are caught in informal activities. Now, if you're going to grow these economies in ways that would benefit a larger population of people, it's to look at the informal sector and to see how you can provide the basic systems and institutions and the kinds of incentives that would make people naturally migrate from informality to formality. In that informal sector, we see a lot of activities that go on across the borders. Now, can you imagine what would happen if through the sophistication of public policy, these countries could align their macroeconomic policies, their fiscal policies, their infrastructure development? One of the things that I am very proud of is what we did supporting the West Africa power pools, so that some of the small countries don't need to bother themselves trying to generate power when they could actually buy power if you invested and developed power by looking at the entirety of the mix, whether it's in terms of the hydro potentials that you've got within West Africa. In Africa, I think Guinea is the third country with the largest hydro potential after DRC, and followed by Cameroon, followed by Ethiopia. And then it's Guinea, then it's Cameroon. This is the axis where it happens. How do you get this policy alignment so that you can actually facilitate your citizens that are already finding themselves? Tolu said what technology is doing with the young. A lot of the young West Africans know themselves a lot now by virtue of activities that are going on. But I think the slowdown is on the part of the politicians. And it is about time that they looked at the numbers. The numbers basically should incentivize the leadership, the policy leadership of governments toward integrating more.
Now, Bismarck, let me come to you. You wanted to make a point? Okay, looking at, we're still talking beyond oil, looking at the future for West Africa beyond oil. Still back to this small countries that are still discovering oil. Now, what kind of incentives, or rather looking at other industries that they can focus on in specific terms now, transformation agendas, structural agendas, whereby they can, it's not a bad thing to find oil, it's a good thing. So while they harness that, or do on the one hand, what sectors can they begin to specifically build on? Agri, manufacturing, health is also one of them. Perhaps Akude will talk about that when you're done.
First and foremost, there's a question of managing the crisis of false expectations. I've been to Ghana a few times, and Ghana is going through a major transformation in expectation of oil revenues. There's been rapid growth. Ghana is firing on all cylinders. However, it is creating imbalances. Ghana, since they found their 160,000 barrels of oil, have had serious policy difficulties, so much so that they've reinstated some exchange control in the last 4 or 5 weeks. So I think there's a question of expectations, false expectations, which has to be managed, and then carrying out the structural and other changes. And some of these changes are not indigenous, that is, not looking inwards. They are kind of cosmopolitan and what cuts across countries, international changes. The fact is that, whether we like it or not, internet, social media, information flow, people flow, trade flows, the world is becoming coupled. The economies are becoming coupled. So pursuing economic silos, right, and making those changes on the assumption that you can actually protect your boundaries and all of that and develop that assumption has to change. Right now we have what we call the common external tariff, which means that countries I can import the duty structure and the levy structure under the WTO and CAT means that West Africa as a whole have the same tariff. Flights between Nigeria and Ghana used to be about 4 a week, then about 28, 32 a week. There's now the Ghana Airlines and other airlines coming in all the way to Abidjan, Monrovia, and all of that. Now, so there will be the commodity-driven economy. There will be the mineral and oil extractive sector, but then there'll be the service sector, and more than anything else, what Obi is talking about, the policy and institutional reform that all takes place, because you have to be looking at it in the context of a regional economy. And regional economic efficiency, because people can now move and people can communicate, if they cannot get what they want in one country, they just walk across and get it somewhere else. You can use your ATM anywhere across in West Africa. So I think my take is, one, manage the false expectations so that people don't think they are rich when in fact they are less poor, right? There's a difference between being less poor and being rich. That the problems of poverty, inequality, and lack of opportunity and lack of social mobility is not swept under the carpet because of this false expectation of we are now wealthy. That we have to manage that oil sector itself efficiently before you even talk about diversifying into other sectors. But those sectors, the sectors you are in have to be competitive, because there's that thing that we are going to develop, we are going to generate policies to protect. The days of protection are virtually over. So you have to be competitive in the sectors that you want to emphasize, and competitive in efficient in the management of the things that you're going to be importing. When I say importing, you're importing goods and services efficiently. So all of that put together will give you an efficient economic system, which also means that the economic efficient system deals with all countries in that region. So if I'm...
Okay.
Can I
Okay,
step in on
please go
something?
ahead.
Because otherwise we would all be agreeing with one another. And that doesn't make for a good debate, does it?
Of course, difference of opinions allowed.
So I think that, he is right about managing the false expectation. And I think that the most important way of doing this is to have the policy leadership that does this. And across countries, including in our own country, policy leadership that's able to do this is the kind that understands that West Africa or Africa or anywhere else in the world, that citizens have become part of the policy process.
But do our leaders, do they understand that?
So that's what I mean. So that's so important to understand. So for these countries that are discovering oil, the first thing to do is to put the citizen at the center of the conversation about policy choices, because that's part of the way to ensure that citizens know everything that they must know, so that they don't have unusual expectation that you end up not being able to meet. And then they are also transparently, and they can follow your choices, so they know when you have to make really difficult choices that require sacrifice from them. But they would also have to see that you are making the necessary sacrifice. And the way to show the greatest sacrifice is to look at the composition of the budget that is coming out of the revenues being generated from these new discoveries in these countries. As soon as you discover oil, there will be a temptation to bust the budget to the seams. Now, that's the number one fatal move. So just ensuring that you stayed prudent. And secondly, that the composition of the budget, what are you allocating the revenues coming from oil to? The strategy that has always delivered better results in some of the other countries around the world where they have had to deal with this, like Chile. Chile had to deal with this with copper, But what he did was to say, we need to immediately translate the revenues from oil, which is not from copper, which is non-renewable capital, into asset that is more lasting. And so the asset that you translate it to is your human capital, so your investment in quality education to take your citizens to the highest level of knowledge possible, to make them competitive in the area of knowledge, and then to translate it into a very good physical infrastructure that would support what I call the logistical systems for diversification into more efficient sectors. and then to build the right regulatory and institutional frameworks that would support predictability of choices, whether by the investors or by your citizens as consumers. When you've got this kind of a framework working, it's a lot easier for you to move from a natural resources economy to an economy that begins to look at more productive sectors that are competitive.
Haruna, I'll come to you, Bismarck. I saw you raise your hand. You wanted to make a point.
The point I was trying to add is that lack of institutions, and I've heard it being mentioned earlier about institutions and the importance of institutions, of building institutions. It's important that people have, like Doctor said, about predictability. I want to go to a website of a regulator of solid minerals and say, I'm checking, I'm seeing information about that, and I'm getting on the phone, I'm calling somebody, and somebody's giving me the right information. What I'm saying is that there must be predictability. Whatever policies or things have been put in place to ensure these things are done must have a check and balance. What do I mean? If you put the policies in place, you begin to attempt to, execute them. You have to have some kind of auditing system to ensure that those things you say you're doing are the things that you're actually doing. And also to allow you not to deviate away from the objective that you've set in getting there. Half the time we write the best policies, half the time we start on the best executions, but halfway through the line, we derail. We don't find us getting to where we should be. And then we begin to form another policy around that inefficiencies that we've done and lead us to the wrong. So you see people going to several trajectories without having that consistent idea about getting to the right place at the right time with the right time frame that you've already put for yourself. So I want to emphasize that in all of the things that have been said in terms of policy and governance and the ability to execute, one thing is important is that there must be a check and balance to ensure that you're on the right track.
Okay. Let me go. I hold your thoughts from Bismarck. I wanted to actually ask you this, the point that Bismarck made earlier, focusing on sectors that we believe will be competitive. Can we focus on that in Nigeria?
I believe so. I strongly believe so. And I think Haruna, who's here from the Stock Exchange, can tell us more. They happened to bring together the health sector about 2 weeks ago to meet and get them to try to get onto the Nigerian Stock Exchange. And it was very interesting because what we now saw was that the health sector is potentially very profitable in Nigeria and other West African countries, but it's largely informal. And it's probably informal because we just don't prioritize it enough. However, we know that the willingness to pay for a new kidney is very strong for Nigerians, even Nigerians who can't afford it themselves. You will find that there will be community fundraisers. People will go and empty out their bank accounts to fly to India to get transplants and to get better health. So there is a willingness to pay. We also have this communal living system that is no longer existent in a lot of the developed world, where I'm actually willing to empty out my bank account to help you. I mean, that's a completely, non-existent idea if you're living, say, in Philadelphia or in London. But in Africa, we're willing to help each other. And so I do think that there's a place for investing in health. And I think that the willingness to pay is there, but we just have not seen that good health care, the good services that will produce the good outcomes. So people will fly outside to other places and even get scammed on their way out sometimes. The other point I just wanted to make, and building on what Dr. Ezekwesili said, and also Mr. Ruwane, the conversations on policy, putting the citizens first. I think our African leaders have to have a conversation about the value of the African life. I think first we have to ask ourselves, how much is the African life worth? And I think we need to have this conversation nationally, in country, but also regionally. Because until we have this conversation, we will still get caught up in a lot of divide and rule activities. We will still get caught up in not even understanding fully why we're pushing the development agenda. So why develop the oil sector? Why develop the education sector? Why? At the end of the day, it's for human beings. It's for people. And we need to have a conversation about whether we value the African life or not, because I think we're heading down a very dangerous path. And I see it here in Nigeria, I see it in other African countries, where it's okay for, 20 people die here, it's the front page of the newspaper, we flip and we keep moving, 15 people, 100 people here. The value of the African life, I think, is in question. And we need to have a very frank, honest, authentic conversation about that and decide whether or not we're going to place value on the lives of our citizens.
Okay, Tolu, let's hear you.
You know, I think we also need a bit of shock therapy here. You know, that the world is not going to sit and wait for political will, you know, and all that stuff to come into place. So one good example is with Nigeria. The policy, the national oil and gas policy that is the basis of the petroleum industry bill today was finished about 2008, you know, and it's been in debate, you know, perpetual debate since then. In that time, for example, Ghana, you know, has discovered oil. We found, you know, lots of oil in Mozambique, gas in Mozambique, in Tanzania. In that time, the whole shale oil conversation has started. You know, so the point is that the world is not going to sit back, you know, and wait for you to get, or for us to get things working. And if we're not careful, you know, we'll be having, you know, the conversation we're still having about, now we're talking about reforming the oil industry, you know, PIB, let's fix it, you know, but the world is not even sitting waiting for that to happen. You know, there's, you know, people are moving on. There's stuff happening. Once upon a time, you know, you had to, for example, even here in Nigeria, you had to sort of be plugged into government to make a lot of money. Now we're starting to see the first set of emerging millionaires who are making their money off internet businesses, you know, off filling needs that have existed, you know, forever that nobody has paid attention to. So I think governments also need to know, to constantly be told that, you know, political will is not something that we're going to wait for you to amass or to put together.
Are the voices of advocacy loud enough? You're a social commentator. You write on these issues. I mean, I read your publications all the time, and I know that the voices are getting louder. But are they loud enough, and are we getting the attention of policymakers?
Well, yeah, things are starting to change. You know, let's not forget that we're coming from an age in which people's voices were not available to be heard. It takes a while to purge ourselves of that mentality, of that sort of military mentality, where it was, you know, things were decided by a small core of people, and the mass of the people had no opportunity to speak back. People are just starting to get used to that, the idea that accountability, you know, is your responsibility. You know, and so it will take some time. But I think that, you know, in the last 5 years, we've seen a huge change in terms of citizen perceptions about accountability. It's going to go on, you know, and hopefully the voices will get loud enough to a place where governments themselves would begin to pay, you know, a bit more attention.
Okay, we'll go into closing comments, 30 seconds each. Please, I'm sorry, we're almost out of time. 30 seconds.
I'm a believer that private capital with a handshake with government is the key stimulant for growth in any industry or any sector in any country. I believe that if you unlock private capital and give the ability for private wealth to be created appropriately and set the right rules, private capital will eventually help in stimulating growth within the economy. And I think we need to focus on that. And we need to look at, you know, economies that have developed using private capital with the involvement of government in only forming regulation and assisting and ensuring that there's a fair playground for everybody to create wealth. And that wealth will come back and develop economies. I think we need to focus on that when we're making policies or when we're pushing for policy changes and advocacy. Okay,
while we close, let's also keep this in mind. Can we really envision a West African region beyond oil and gas? Is it possible? Can we achieve it?
Absolutely.
We've said all that needs to be done.
Absolutely.
Dr. Ezekwesili.
I certainly think so. And that's why, you know, my advice normally to a president, say a number of them in West Africa that I advise in my current dispensation, is really that you must have a human capital development-led economic strategy. It's really, you know, the emphasis has got to be the human capital development-led economic strategy, so that from the very beginning, you're putting a lot of emphasis on the human development issues. So your health, your education, those sectors are so critical. And part of the way to ensure that you're achieving that is to have your budget priorities right. And so that as a vision, and then immediately you're discovering oil, put in place systems of transparency and accountability in your public financial management so that it creates a system of discipline. If you're going to get some crazy ideas, those systems would check your crazy ideas. And then number 3 is to make sure that the concept of productivity goes through your mind in every policy choice that you're making. Just simply talking about growth doesn't do it anymore. We now know that Africa can grow. Africa has grown from low levels of negative growth rate before 2000 to sustained growth rate of an average of at least 5% per annum. Now, we need to go beyond that and focus on the issues of inequality at a poverty level of an average of about 49 to 50% still in West Africa. That's a huge number of poor people. And so a pro-poor policy is one where government presents the leadership to ensure that there is good economic governance. That means you should pay a lot of attention to political rascality that leads to endemic and systemic corruption, distorting your public policy, distorting your budget priorities, distorting the way that your institutions work. You can't do all of this and then somehow create new economies that are not completely concentrated on the kind of sector that encourages your bad behavior.
Thank you, Dr. Nkesi. Bismarck.
Comment first and foremost, talking about putting people ahead of government, citizens ahead of government. Citizens will always be ahead of government as long as there's a proxy for the citizens called the markets. Markets can discipline anybody. And the markets have disciplined leaders and governments across the world. As long as you don't have efficient markets, then your citizens are going to be exploited. So I just wanted to make that comment that yes, citizens-led policies, citizens that actually ask for accountability, but the best accountability is to have efficient markets. But now, coming to the long-term economic sustainability model, which is beyond oil. Most important thing for me is shifting away and dealing with those things that we have a comparative and competitive advantage. So that there are many things. Going beyond oil is not just a concept and a rhetoric. It is prioritizing which of these sectors that you're going to emphasize so that you are both domestically and internationally competitive. If you want to produce cement in your country, you don't just produce cement for the sake of producing cement. If the cost of your cement is going to be much higher than the average international price of cement, what you will do is to encourage smuggling. And you need high duties and all that to protect it. So the policy framework and the competitiveness and the efficient markets will help to lead you in that direction. In any case, because global barriers are falling, right, and trade is increasing, investment flows are increasing, people are moving across, it only pays that you have to be efficient, competitive, and that's the way I think it will be to lead.
Well said. Akudo.
In closing, I will come back to my original statement, which is that I move that we start with life first, that people need to be alive for all of this to happen. And in fact, even if we have a richly diverse economy that has beautiful frameworks, great policies are in place, all of that is in threat from a security standpoint if we don't invest in the social goods for our people. Health, education, people need to be alive, well, and eat and have a good education. So I'd say we need to put those aspects first. I also want to say that we haven't mentioned gender here at all, but that's half of the economy that's wasted essentially, and that we ourselves, as Africans, tend to set up barriers for women to even engage economically. And we use the words culture and honor to veil those barriers we've set up. That's another conversation. But I do think that it's a big part of this when we're talking about the growth story, that including women is important for the growth story to really stand, because that's half of the economy. Last statement would be that we need to see the sense of urgency in the fact that we have on average half of the life expectancy of the developed world. We need to take that as an emergency and deploy innovative solutions to make up for the gap. And it will take innovation in training healthcare workers, innovation in technologies, innovation in delivery systems. It will take innovation in every area to make up the gap that we've missed. But first, we need to make it a priority.
Thank you so much, Akwedo. Tolu, 30 seconds.
Sometime last year, or sometime in the last 2 years, Apple overtook ExxonMobil as the world's most valuable company. I don't know if that sort of it was, if it's still the case now, but the fact that it happened in the first place says a lot about the way we should be looking at the future. Companies based on extraction innovation is not their selling point. It's about plugging in and sucking all you can. A company like Apple, for example, is about innovation. It's about the people, essentially. And that's a message to African countries that at the end of the day, I think it's your people and not your oil or your gold or your diamonds are going to be your most important resource and your most important asset. And so for me, that's just the point that, look, governments should start to see their people, and not their resources as their biggest assets. And so you want to cultivate a population that is healthy, that is innovative, that is problem solving, and that is forward looking.
Well, thank you so much. Well said, Tolu. On that note, we've come to the end of this panel discussion. Thank you so much. It's been a pleasure having you all looking at the topic, of course, the future beyond oil and gas in West Africa. On that note, we've come to the end of this special CNBC Africa debate ahead of the World Economic Forum on Africa holding in Abuja, Nigeria in May. My name is Esther Budaga. Bye for now.